Hi, this is Tim Yoder with Fit Small Business. Today I'm going to evaluate Sunrise accounting software in our accounting rubric based on Chapter 3 of our case study. So let's get started. Um, First task in our case study in Chapter 3 is to set up a 6% sales tax to be collected on the sale of goods but not services and payable to the state of New York. Okay, so here we are in Sunrise. We need to set up a sales tax. So let's see where we do that. Let's go to settings perhaps. Tax settings maybe. Nope. Here we go. Sales tax rates. Okay, so rule sets are used on invoices. Normal sales tax rates. Let's see, can we edit this? Let's let's call this the New York sales tax. Sales of taxable goods. Okay, now let's see what these rules are. If United States, any state, any city, any contact type use okay, so this should do it. New York sales tax, sales of taxable goods. Now we may have to make sure it's included or not included on our individual invoices, but that's fine. Okay, okay, so that should work. So that's our 6% sales tax. Okay, so in our rubric, create a sales tax item. I would say that was sufficient, so I'm going to go ahead and give Sunrise credit for that. Okay, now second step in Chapter 3, customize an invoice template by uploading a logo and adjusting the color scheme to match the logo. Okay, so we want to customize our invoice. Let's see, templates maybe? Yeah, I think so. Okay, so appearance, font color, source, header. Yikes. I mean, it looks pretty good here. I mean, as far as lots of options, that's nice. Looks maybe a little complicated. Okay, well let's do this. So here looks like where we can upload our logo. So let me um, pull up that logo off the screen here. Okay, there's our logo. I'm just gonna drag it over here and put it right there. Okay, well, that was cool. Okay, I like that. Um, okay, let's see if we can change the colors up just a little bit. So font color, let's change that to maybe a blue. What would kind of match our, yeah, maybe something like that. Did that change anything? Here, preview. Didn't really change anything. Did it? Did it? Here, let's just make it a bright change to see if it works. Okay, so it works. Okay, so let's change it to maybe a lighter blue. Well, okay, I'm not going to get picky here. We got to move on. But as you can see, we can change the colors. We could get it exactly like we want. So that's nice. What else can we change? The header. Let's give the header a nice bold blue. Okay, so that's that. That's more of a purple. Okay, so good. So the colors are definitely customizable. What else do we got here? Header font weight. We can change the font. Wow, this is quite customizable. Primary border color. What can we change this to? Just out of curiosity. What does this change? Okay, so that's the lines there. Got it. Well, maybe a little bit of a gray. Okay. Cool. Change our margins. Logo alignment. Center's fine. Background color. Oh. Okay. White background color, but we can actually... Ooh, you can put in a background image as well. Okay. I tell you what, I like this. I mean, you can't move around the sections too much and stuff, but as far as the appearance of it, you have a lot to change. That's very nice. Okay, so let's save that. I like it. Cool. Okay, so back to our rubric here. Choose invoice template. Yes, there are templates. Upload the logo. Change the invoice colors. Oh, can we create a personalized message on the bottom of the invoice? So we wanted to put a message on the bottom thanking them for their business. Well, I tell you what, background image, you can maybe put a message in the background image. Okay. Wow, you can actually customize kind of. So this is customizing the word part of it. Document. Here we go. Document footer message. Thank you for your business. Very cool. Okay, save it. Wow, I'm impressed. Had no idea Sunrise had that good of invoice customization. So, create the personal line message. Okay, so moving on to the next step in Chapter 3. On 116, issue an invoice to Family Bowling for the 40 hours of Hank's labor and $200 permit fee. No sales taxes required. So those are things that we tried to record in the prior chapter, but with Sunrise, I don't believe we were able to do that. No. So inventory, Sunrise doesn't really do anything with the inventory. And you were not able to designate it as billable. Okay, so this isn't going to work in Sunrise because we weren't able to do the first part. So the first part in Chapter 2 was to record these expenses, the labor and the permit fee, as unbilled expenses, and then in this chapter we're going to add them to an invoice. We're not going to be able to do it automatically, but we are going to go ahead and create the invoice anyway, even though we're going to have to do it manually. So let's go to Invoices, create an invoice. We're going to have to add the customer. The customer's name is, oh, and it is this Family Bowling. Nice. Okay. Oh, you know what? I think we forgot to maybe name our template. No big deal. Invoice was for January, was what? January 16th. Okay. Add a product or service. So, plumbing labor. But this is, we were able to set up the plumbing labor items, but it's not giving us the labor that was actually billed to Family Bowling, or I'm sorry, actually assigned to Family Bowling that we're now trying to bill. But it is giving us the labor that the labor product that was set up. So that's good. But it's not quite the same as capturing what's already been billed to the client. But we can adjust this. We can say this should be 40 hours. and the $200 permit fee. So we need to add another product or service. Okay, looks like we haven't added that yet. Okay. Okay, so, and there's no sales tax on either of these. Okay, 40 hours of Hank's labor. Let's make sure that was supposed to be $80 an hour. Yes, prior chapter says $80. We're going to bill $80 an hour. Okay, good. So this looks like it's correct. Okay, so now we need to, let's preview it. Good. That's the invoice we set up. Looks pretty decent. Now we want to, can we print and mail this thing? Let's see. Review and send. So we don't want to enable payments at this point. Okay, so now we have it pulled up. We can print it here, or we can send it as an email. We have either choice. Okay, good. So I'm not going to actually do that, but we can see it's possible. That's all we really need to know. Okay, so back to our rubric here. Create a new customer was no problem. Add unbilled labor and expenses to the invoice. We weren't able to do that because, again, in the prior chapter, we weren't able to track unbilled labor and expenses. Print the invoice is no problem. Email the invoice is no problem. Okay. Next, we're going to deal with inventory. So on 127, record an invoice for the sale of 20 plumbing widgets to Big Time Diner for $25 each. Be sure to collect 6% sales tax on the entire sale. Okay. So here we go. This is our invoice screen. Interesting. So let's create another invoice. We need the customer to be Big Time Diner. Looks like we don't have them set up yet, so we'll just hit create a new customer. Big Time Diner. Okay, kind of nice. You can create it on the fly. Okay, invoice date was the 27th. Okay. So we are going to sell them 20 plumbing widgets. Okay, good. It's pulling up the item. Okay, so $500. Good, and we're going to have to collect the New York sales tax of $30. Very nice. Okay. Good. So I think this is all we can do here. So we've created the invoice. And so I think we can review and send. We don't want to do payments right now. Oh, you know what? Let's go back and see how easy it is to change it, because we want it to be the better. We want it to be the other template. Can we edit it? Yes, we can. Default template 1. There we go. Nice. Okay, so from this point then we can obviously email it or print it again. So back to our rubric here. Add inventory to an invoice is no problem. Charge sales tax on the sale of an inventory is no problem. Okay, now we sold the inventory, so let's see what the program did. Now a good program that handles inventory correctly is not only going to record the sales price of $500 as revenue, but it's also going to record the cost of goods sold, the cost of those 20 units. And so if the system is using FIFO, or first in, first out, it will record a cost of $10 each for a total of $200. If it's using average cost, the average cost is $10.33, so the total cost of goods sold would be $206.67. So let's go to our reports and let's see what it recorded. Okay. So it's recording some gross sales of $3,900. Let's see if we can get a breakdown of that. Okay, so it did record $530, and only $500 of it is revenue. That's fantastic because that other $30 is sales tax. We don't want that showing up as revenue. So $500 of revenue. That looks great. Yeah, I don't care for that. It takes me to my chart of accounts instead of my income statement. Cost of goods sold, labor costs, those are what I charged in chapter 2, cost of good purchases. Yeah, so it doesn't have the cost of goods sold. So let's click on these, make sure. Right, this $1,200, this is what we paid Hank, the independent contractor. This is not the cost of that inventory that we just sold. And this $200, that was the cost of that permit. So the cost of goods sold is not being included here, and that's really a problem. If we deal with a lot of inventory, that's a real pain. So what we're going to have to do is we're going to have to go in, and let's look at our balance sheet as well before we do anything. So our balance sheet, inventory of 1649. Let's see what that includes. Okay. Yeah, so that's all of this prior activity that we did, but there's no sale here. Okay, so let's go back in. We're going to have to create a journal entry, is the only way we can record the cost of goods sold. So let's do a new transaction, manual transaction. As of the sale date, which is 01/27, record cost of goods sold. So we're going to have to debit our cost of goods sold, and we're going to debit it. That's the expense. We're going to debit it. Let's assume we're using average cost, so that's $206.67, and then we're going to credit inventory for $206.67. Approve. Now let's look at our profit and loss statement. Now we have the cost of goods sold. They call it purchases. It's really the cost of the inventory actually sold. And then on our balance sheet, we have our inventory being decreased by $206.67. Okay, so now we've got it correct. And so this is a perpetual inventory system where you want to keep actual track of the cost of goods sold in real time. This isn't the 80s anymore. There's no reason to have to use perpetual inventory. But if you're using Wave with inventory, that's probably what you would do. You just cannot go in and have to make that journal entry every time you sell something. So perpetual inventory means that at the end of the month or the end of the year, you're going to take a physical inventory count, and you're going to use that to base your inventory cost on, and then you'll just plug in your cost of goods sold. But you really should be able to keep track of everything in real time. And you cannot do that with Wave. So if you have inventory, you should really not use Wave. Okay, so back to our rubric here. Determine if the program automatically recorded cost of goods sold. It did not. Okay, create an item for the service contract. Okay, so let's see. So our next step here is on 131, create an inventory, create an invoice recurring monthly to Trampoline City for $100 per month for a service contract. No sales tax is collected. Okay, so let's go back. Invoices, create an invoice, Trampoline City. Again, very nice. We can add these customers on the fly. Let's just choose that second template that I like a lot better. And we're going to do this. This is going to be monthly at the end of the month. We're going to add a product or services. And this is a service contract. And it looks like everything you add to an invoice has to be set up as an item, which is fine with me. So let's create this service contract. We can create it on the go, which is pretty cool. We'll just call this service contract as well. Quantity 1, and the service contract is for $100 a month. Okay, no tax has to be collected, so that's $100. Okay, so this looks pretty good, but how can we make this recurring? We don't want to have to come in and do this every single month. Well, let's hit review and send. Let's see if we can find some other options here. Well, we can duplicate. That could be helpful, but you still got to come in and do it manually. I'm not seeing anywhere to do automatic invoices. So I tell you what, I'm going to hit pause and I'm going to do a little Google searching here on Sunrise, see if I can find a way to do a recurring invoice on Sunrise, but I don't think we can. Okay, I'm back. Yes, you can do recurring invoices in Sunrise. Actually, odd, they have a separate spot altogether. So we have invoices and recurring invoices. So let's go to invoices and let's delete what we just did. I don't want it to show up twice, so let's go into this trampoline city and let's hit void. Are you sure you want to void? Yes. Invoice has been voided. Okay, now let's go to recurring invoices. Create a recurring invoice. Select a customer, trampoline city. Let's use our template we created. Now we can't set up recurring invoices for the past, so it's not going to be in January with the rest of our transactions. We have to start with today, and we're going to do it every month. Net 30, create an invoice, and email the customer. Okay, there we go. Okay, so it's going to automatically do this every month until we tell it to stop. So let's select a product. I think should still be in there. Our service contract. No tax. Quantity 1 for $100. There we go. Start recurring invoice. Okay, and it's going to tell us we have to have a mail recipient. So let's just call it trampoline city at fake.com, I suppose. Oh, here, maybe we need to. Here, maybe we change this. Create invoice only. Now maybe we don't need that. So we're not going to email it, we're only creating it. Well, it says contact person is optional. Okay, there we go. Got our $100 invoice. Okay, and good. Created now. Next invoice date, August 26th. Frequency every month. Okay, so that'll be the first one. Then after that, it should be every month. Okay, so I think we did it. We created a recurring invoice. Not the simplest thing in the world. A little weird that they have a completely different section for it, but it was accomplished. So I'm going to give it a 1 for that. Okay, now let's start getting paid for some of these invoices and see how Sunrise is with that. Okay, so On January 20th, you receive a check from Family Bowling for the full amount of the invoice. Record receipt of the check, but don't deposit it into the bank account yet. So, this will be interesting. I don't think Sunrise is going to let us receive a check without. Okay, so this was from Family Bowling. So that's this $3,400 and enter payment. $3,400. Okay, so it's making us see if the problem here is if we put it directly into the checking account, it's going to show up in the checking account as a $3,400 deposit. But what we're going to do is combine it with multiple checks and then deposit it. And so the deposit amount on our check statement is not going to be $3,400, it's going to be $3,400 plus some other stuff. And it's going to make it very hard for it to reconcile it. So we don't like to do that. However, it doesn't give us any other choice. So I'm going to go ahead and just put it directly into the checking account. Okay. So to the rubric, receive a check on an outstanding invoice. We were able to do that. Don't deposit the check received. We weren't able to do that. It makes you choose the bank account right then. It doesn't let you set it aside. Okay, next step. An unknown customer comes into the offices and purchases a plumbing widget for $25 cash. Record the cash received, but don't deposit it yet. Okay, so here we want to create a sales receipt. And I don't think there's a way to do that, right? We'd rather not have to create an invoice because it's being paid already. There's no point to an invoice. We'd rather have a sales receipt. So let me pause you again, and I'm going to jump on Google, see if I can see if there's an easy way to record a receipt. Okay, I'm back. So it's kind of what I thought. We're going to have to record an invoice that's paid immediately. So let's do that. So let's create an invoice. So this is just a walk-in customer. We don't have their name, so let's just call them walk-in customer. Oh, okay. Okay. This was on January 25th. Payment due, since it was paid immediately, just go ahead and give it that date as well. Okay. Add a product. This was a plumbing widget, just one plumbing widget for $25 cash. Of course, it's a plumbing widget, so we need to collect sales tax for $1.50, $26.50. Okay, review and send. No payments. Okay, there we go. So we can print this out and give them to this as a receipt. Okay. But they paid it immediately. So let's see if we can actually give them a receipt that shows that they paid it. So let's go more. Enter payment. $26.50. That same 0125. Enter a payment account, cash on hand. Enter the payment. Okay, here we go. Now we can print this out, give it to our walk-in customer, and it'll show that they actually made the payment. Okay, but that is not a sales receipt. That is an invoice. That's a lot more work than it would have to be if we could do it as a sales receipt. So not going to give Sunrise credit for doing sales receipts because they don't. So issue a sales receipt. Nope, that's a 0. Okay, moving on. On 1/30, you receive a check from Big Time Diner for the full amount of the invoice. You combine this check with one from Family Bowling and the $25 cash and deposit them all into the bank. Tell you what, I'm going to change this one up a little bit. And let's receive, I just want to receive a part of the amount. Let's see if we can receive, we're going to receive it in 2 payments. So Big Time Diner owes us $500. So I'm going to change the facts a little bit here. On 130, let's say we receive $200 towards the invoice. Okay. And then let's just say later that day you receive the other the other 330. So I just want to see if we can do a short payment from a customer. And then we're going to combine it with the $25 cash and deposit them all into the bank. Okay, so let's, on this $530, let's see if we can record a short payment of $200 on 130. And again, we don't really have much choice but to put it into checking account. Okay, so it's different than the invoice. Please indicate why. Just a partial payment. Enter payment. Okay, well, nice. So it still shows us that Big Time Diner is going to owe us $330. Okay, now let's go ahead and record the remaining $330. Okay, nice. Okay, so they paid us up. So I'm going to, give me a second here, I need to add something to my rubric. So accept short payment from customer. Okay, now, so we want to combine all of these checks together and deposit them into our bank account. Well, they've already all been deposited into our bank account. So let's look at our bank account. I think the easiest way, let's go to our chart of accounts and find our bank account. So our checking account, right? So there's the $3,400. There's the 2 different checks from the diner, but we don't have the $25 check here yet because it is still in our cash on hand. But you can see the problem, right? When our bank statement comes, it's going to be $3,400 plus $330 plus $200 plus $25 all in one deposit, and it's not going to match with this very easily. And so I do believe you'll be able to match them up okay, because these are all kind of different amounts, so it's obvious which checks get combined together to make that total. But if you have checks from multiple customers that are all for the same amounts, like they all pay you $100 a month for a service contract, it's going to be impossible to know which customers paid you and which customers didn't, which customers got deposited, I should say, and which customers didn't. So not at all good the way this is set up. Okay, but let's go ahead and get that $25 into our checking account. So how are we going to do that? I think in our, actually, let's go to transactions, I suppose. We'll call that a bank transfer because the cash on hand is essentially set up as a bank account. Transferred from cash on hand to the checking for $25. Okay, there we go. Okay, so not happy with how it does that. Okay, so on the rubric here, combine multiple checks received into a single deposit. We cannot do that. Combine checks with a cash amount and deposit that. We can't do that. Okay, so getting towards the end of this chapter here. Hang with me. Um, okay, so now we want to view the outstanding invoices. There should really only be one, and that's from Trampoline City. So I think if we go back to our invoices, now we don't see any invoices here, but again, that's because they separated out recurring invoices, which is a little bit weird. And our next recurring invoice, okay, so it will show up there, so it's $100. It's just that it recurring invoices in Sunrise have to be in the future, and so it won't show up as an invoice until tomorrow. So normally it would show up here. Okay, so recurring invoices have to be in the future, so that's fine. I'm going to go ahead and give it credit for being able to view outstanding invoices. View outstanding invoices without generating a report, yes. Okay, good. On February 5th, Big Time Diner returns 2 plumbing widgets, accept the plumbing widgets back into inventory. Issue them a credit memo including an adjustment for sales tax, view the credit balance in their AR account, refund the credit balance by issuing them a check. Okay, so let's see how Sunrise does with this. This is fairly complicated here. Okay, so we're in our invoices section. If I remember right, up here there is a create a credit note. So let's create a credit note. This is for Big Time Diner. Okay. Set February 5th. Interesting. Okay, so it asks us which it relates to, and it relates to this one. Okay. I'm interested in how it's going to do this. So, they returned some plumbing widgets. They returned 2 of them, and they had paid $25 each. So that's $50, New York sales tax. Okay, so we should be giving them a credit for $53. Okay, so let's go ahead and click review and send. So a credit note for $53, amount to be refunded, including tax. Okay. Interesting. So enter payment. I wonder what that will do. So I'm just curious here. Okay, so first of all, I want to see if we can see that there is a $53 credit in the customer's account. So I wonder where this takes us here. So Big Time Diner is our customer, gives us all the invoices. Nice, so they do have a $53 credit. Okay, very nice. Including an adjustment to sales tax. Okay, so let's see if we can refund this credit balance. So let's go into here. I wonder what this interpayment. Okay, so let's go 0205 $53, and that's going to come out of our checking account. We're going to write it from our checking account. Okay, enter payment. Okay, so we credited it to them and then we paid it to them. Okay, very nice. Okay, mark as sent. Okay, so let's go back to their customer page here. Okay, so it shows it as being paid. So let's look at I want to look at our income statement here. Make sure it looks like everything is showing up okay. So gross sales. Good. So our gross sales were reduced by $50 for that return of those 2 items. Very good, very nice. Okay. And our bank account. Let's make sure it came out of our bank account correctly when we wrote the check to pay it. So checking account. Cash sale 25. Yes, paid to Big Time Diner, $53 credit. So we've reduced it. Excellent. Okay, very nice. So I think it handled that credit pretty well, except again for the inventory part. Right? It's the inventory. It doesn't handle the inventory. So again, we're going to have to go do that by hand. So let's go to transactions, new transactions, manual, 0205. So now we're putting it back into inventory. 2 units at what was the average cost? 1033. That's 2066. We're taking that out of our cost of goods sold. So again, this is what we would have to do if we wanted to use a perpetual inventory system. If you do have inventory with Sunrise, I would suggest a periodic inventory system where cost of goods sold is based on physical inventories. But again, this is 2021. You shouldn't have to do that anymore. Okay, excellent. Good. So anything else with that step? No, actually, it did very well on that step, except again for the inventory part. So issued a credit memo to the customer. Yes, it did. Include sales tax adjustment. Did that up very nicely. Record inventory. Returned back into inventory. It would not do that. View balance by customer. It did. Issue a check for the refund. It did. View transactions summarized by customer. Yes, it did do that. Let's see if we can find that again here. Invoices. Contacts maybe. Yeah, okay. So if you go into your contacts, find your customer, that's where you can get all the transactions by customer. Very nice. Okay, now getting into even some more complicated stuff. So let's look at our sales tax. It's been collecting sales tax fine. Let's see if we can pay it over to New York. So on 2/15, let's write a check to the state of New York for your sales tax liability as of 1/31. So let's look at our sales tax liability. So I don't think it gives us anywhere to manage our sales tax liability. Oh yeah, it does sales tax. Let's see what it tells us here. First quarter 2020-21 not settled yet. The result is 2850. New York sales tax 2850. Okay. So it's doing it quarterly, which is fine. I wanted it January 31st, but that's okay. We'll do it quarterly is actually probably more realistic. Okay, and so this includes that credit. It doesn't give me a breakdown, so I can't really see what's happening. But it is looks like it's doing it correctly. So what's our other options here? Change period. Okay, well let's see if I can change the period. Monthly. Okay, there we go. Now I can do it for January. Settle period. This will even out all sales tax accounts, transfer the amounts to the settlement account. Make sure to report the numbers to your tax authorities yourself. Yep, so you want to make sure you got everything entered. Do you want to settle this period? Yes. Excellent. Okay, so we have to file the sales tax report ourselves, is what it was telling us to do. So we have the 3150 into our settlement account, but not paid yet. Oh, enter payment. Okay. Amount due 3150, payment date 02/15/2021. Coming out of our bank account. Checking, enter payment. There we go. Settled and paid. Sweet. Not bad. Not bad at all, Sunrise. So view sales tax liability detail. Now it didn't let me view the detail, and I'm not very thrilled with that. there any? Let's see if. Yeah, see, it gives me the totals. What if I do export? What about reports? Oh no, these are the reports. What about, let's look at our balance sheet. See if we can follow it with our balance sheet. So there should be a current liability for sales tax payable. Yeah, okay. So we can kind of see the detail there, but that's not sufficient. Um, Needs to be clearer. So I'm not going to give it credit for that. So view sales tax liability detail. It really doesn't give us a nice sales tax transaction report. Pay sales tax liability with a check does that. So as long as you believe their numbers, you don't have to double check them. It works very well. Pay sales tax liability electronically. It did not give us an option to do that. And file the sales tax return. It didn't, but it did let us cut a liability check, settled it very quickly. Actually, pretty happy with the sales tax function for a free program. So let's see. I believe that's it for chapter 3. So I think Sunrise actually did very, very well. Other than the inventory shortfall, so it doesn't allow you to do inventory, and it doesn't let you accumulate multiple checks prior to depositing them into the bank account. But for a free program, that's okay. Pretty impressive. Okay, thank you.